It was a steady performance from Bharat Forge in the fourth quarter. A one-time loss led through profits dropping 50%. Let's discuss the quarter gone by with the Executive Director Amit Kalyani. Also joining in is Yatin Mota from the research team. Yatin, take it away.
Thanks for that, Darshan, and welcome, Mr. Kalyani, and thanks for taking out the time. First of all, if you could, tell us what have been the growth drivers really for the fourth quarter. We have seen the export markets do really well for Bharat Forge. Do you expect such a momentum to continue at least for the next couple of quarters?
Well, let's start with FY18 quarter
Okay.
four. Quarter four, we had a pretty strong performance, driven both by domestic and by exports. Both have grown roughly, by the same amount, 6-7%. In the quarter, we've also, further received new orders, which take our complete, new wins to cumulatively about 1,500 crores in the recent past. And these are across passenger cars and the industrial segments. There has been an impact of steel price increase, which is a pass-through. So it has some inflationary impact on the top line. Bottom line has been strong. EBITDA was almost 29.8%. This time, our PBT before our exceptional item was 370 crores. There was an exchange loss this quarter relative to last quarter because of the swing in exchange, which is notional. And we have taken a provision of about 130 crores, which is towards some project expenses we had undertaken in the last 4 or 5 years ago, where we were investing in some new businesses, but we have decided to stop that, and this has been provided for. So without taking the one-time provision into account, I think we've had a very strong performance, probably our strongest performance ever. And we see a very strong demand from the commercial vehicle sector, both in India and in the US, passenger car sector across the world, and our industrial business continues to grow. Hopefully there are some green shoots on the defense side as well, and I think overall 2019 will be a very strong year, and we expect that with the current commodity cycle, especially on oil and gas being so strong, our oil and gas business also will continue to remain very, very buoyant and give us more opportunities for growth. So I think overall we should see a very strong growth this year and continue the growth path that we've been on as we head towards the next inflection point, which we're investing for currently, which is getting into the EV supply business. We've set up our R&D center in the UK that's fully functional, and we are now well underway working with several global customers on developing products and solutions for EV electric vehicles globally. And additionally, we have announced a capex of 175 crores to set up our new lightweighting center in Andhra Pradesh. And additionally, we will be investing about 400 crores in setting up new forging and machining facilities in Baramati. So this should allow us, lots of headroom for growth going forward and ensure that, we're able to encash all the new opportunities that are coming our way.
Okay, Mr.
So I'd like
Kalyani,
to say that on the
coming to
balance sheet side, the balance sheet has strengthened substantially. We have, on a net of cash basis, we are at zero debt, below zero debt, and our return ratios have improved. And our overseas subsidiaries have also performed much better, and our, this year we expect that they will have a substantial improvement in performance as well.
Okay. And Amit, talking about the domestic business, you said that commercial vehicle business is doing well. Can we expect similar growth levels, which were there last year in FY19?
Yeah, well, right now we are seeing very strong growth. So based on the current picture, yes, it's looking like it should be as strong as before.
Okay. And what about the US markets? Do you expect the momentum to continue there? And also, if you could tell us, since you are talking about not only domestic commercial vehicle business remains strong throughout the globe, so not only the US market, how do you see the European markets also shape up? If you could give us some guidance on that front.
Yeah, I think the US will do well. Also, our new orders that we have won will ramp up. And, the industrial side across the world will grow because when commodities grow, then the whole industrial business grows. So I think these three drivers will provide a big boost to, continued boost to our exports.
Okay. And Amit, if you could give us an guidance for growth in the coming few quarters or probably FY19, and also tell us that since you are now net cash positive on the balance sheet, which is basically virtually debt free, how do you see the overall capex on the organic front in FY19, and also talking about potential acquisitions in the marketplace, be it local or global? How do you envisage growing through inorganic routes?
We are, as I mentioned, we are going to be spending close to 600 crores on capex this year, which is, which will be completely met by our internal cash flows. Our cash flow for this year would be in excess of 1100. For the last year was in excess of 1100 crores. So funding the capital expenditure is not a problem. At the same time, we are not going to go after just about anything that is available. We have a strategy in mind, and we will pursue opportunities when they fit into our strategy.
Okay, Mr. Kalyani, we leave it at that. Thank you so much for taking out the time and speaking to Bloomberg Quint. Neeraj, management commentary remains strong for FY19, but let's see, the stock is under pressure because of margin miss. Hopefully, the management says that they are on a recovery path on the operating front, and also the US and the domestic markets look quite buoyant.
Well, that's being seen across the board for a lot of companies. Yatin, thanks for putting that into perspective. Avinash tracks this one very, very closely. Avinash, Bharat Forge, you heard the commentary as well. You've seen the numbers too. What's your sense?
No, I think, Neeraj, one disappointment was, the margin. The EBITDA margins have actually come down by about 150 basis points. So I think one is the EBITDA margin miss, and secondly, this extraordinary loss of some write-offs on previous investments, I think, which was completely unexpected. But yes, if one were to look at the profits before this exceptional item, I think both on the top line, EBITDA, and the bottom line front, it's definitely a strong performance. And I think quite rightly, if the commercial vehicle business in India as well as the Class 8 truck business does well over the next, say, 12 months, we could see definitely, earnings as well as top line growing quite commendably. And since the stock has corrected quite significantly, from almost 750 odd levels to, below 650 levels, I would believe that, yes, if one were to look at the next 12 to 15 months, this could definitely offer a decent risk reward considering the kind of buoyancy we see in the domestic CV business and the US markets. So definitely, I think a long-term bet. But yes, in the shorter term, the markets would obviously look at the negatives as far as the margin miss and the exceptional loss is concerned. But typically, I think, these are blue chips which are normally not available at, attractive valuation. So I would believe that this is a good acquisition provided the timeline is over the next, say, 12 to 15 months.